Come with me, and we will blow lots of bubbles as we go. The South Sea Bubble are tales of greed and financial ruin. To understand how this bubble formed, we need to rewind the clock to the late 17th century in England. This was a time when consecutive wars raged all throughout the European continent. England had multiple wars, civil wars like the Irish Confederate Wars and international wars such as the War of Spanish Succession, to name a few. As we know, wars are very costly. It requires a substantial amount of manpower, money, and resources to fund one. And as such, like any other country that raged and joined wars during those times, England also took on massive amounts of debt. Regardless of whether wars are won or lost, England ballooned its debt burden, and paying those huge debts was one of the chief tasks of the government. In 1710, a new Chancellor of the Exchequer was appointed by the Queen, and that person was Robert Harley. At that time, the government treasury had roughly £5,000 in assets. But government debt was breathtaking £9 million. That is massive relative to the country's assets back then. Robert Harley needs money to fund the war and pay the debt. Taxation is one of the revenue streams of the government. Raising taxes would be an easy solution, but the political system was deeply divided, and it was never a popular solution. The Bank of England had been operating a lottery on behalf of the government, but this had produced less money than expected. To solve the debt issues, Harley granted the authority to sell lottery ticket to John Blunt, a director of the Hollow Sword Blade Company, which despite its name was an unofficial bank. Sales commenced on March 1711 and tickets had completely sold out, making it the first truly successful English state lottery. The success was shortly followed by another larger lottery, the 2 Million Adventure, or the Classis, with tickets costing £100, with a top prize of £20,000. And every ticket winning a prize of at least £10. Although prizes were big, they were in fact paid out by installments over a period of years, so that the government effectively held the prize money as debt until the whole prizes had been paid out to the winners. Despite the success of this lottery scheme, the main debt problem was not yet solved. To solve this problem once for all, Robert Harley had an idea: the creation of the South Sea Company. Here is how it worked. People who had a government debt would be able to exchange it for the shares of the South Sea Company at its nominal value. For example, let's say one government debt, worth £10, equals one share of the South Sea Company, worth £10. The government would then pay some of its interest obligations to the South Sea Company. The South Sea Company will distribute a portion of interest payment from government to their shareholders via dividends. Why the British, who owned those debt, agreed to the debt equity swap? Well, because the South Sea Company has great potential to massively increase its earnings soon. It was so obvious at that time. As the War of Spanish Succession came to an end in 1713, Spain had a trading deal with Britain. The South Sea Company was granted the rights and monopoly to trade with South America. Public was sold the dream of getting rich quickly by investing in South Sea Company shares. A lot of influential people and government officials had a significant investment in the South Sea Company. And with John Blunt's sales prowess, he was also able to get King to invest the royal household's money in his company. In the meantime, the company raised more capital by issuing more shares to finance the increasing debt. In 1719, the new scheme passed by the government was to convert the nation's debts, including the lottery debts issues in the past, into South Sea Company stock. The total debt has increased to $50 million from $9 million in less than 10 years. Sound familiar? Everything went well for Blunt and the South Sea Company, as the stock price keeps going up. John Blunt did a lot of things to prop up and increase the stock price of the South Sea Company. He allowed down payment to buy South Sea shares. People could buy a share of a company with 20% down payment, then the remainder will be paid every 2 months. As people made more money on this, they reinvested the proceeds from the previous profits. And as usual, the stock price further went up. Other companies took notice of South Sea Company's rising stock price. A lot of companies started to go public. The problem was that there was only a limited amount of money in circulation in the nation. Having more companies go public meant that the money would not be invested in the South Sea Company. As the government was backed by the South Sea Company, the Bubble Act 1720 was passed on June 1720, forbade the formation of any other joint stock companies unless approved by royal charter. This secured South Sea Company's monopoly through increased funding and, in turn, a higher stock price. In June 1720, John Blunt was made a baronet in recognition of his extraordinary services in public finance. In August of 1720, the South Sea Company reached £1,000 per share. An exorbitant tenfold increase from £100 per share in 1718. Bubble burst. In August 1720, the installment payments of the money subscriptions on new issues of South Sea stock were due. This created a liquidity squeeze and generated pressures to sell shares. Furthermore, the scramble for liquidity appeared international as bubbles were also ending in Amsterdam and Paris. Many small bubble companies collapsed after being bought on margin or used as collateral, which put pressure on share price in the South Sea Company. Then in September of 1720, South Sea stock plummeted, down to £124 by December, losing 80% of their value at their height. Investors were ruined. There was a marked increase in suicides and widespread anger in the streets of London. The newly appointed First Lord of the Treasury, Robert Walpole, removed all the company directors, had their estates confiscated. The Chancellor of the Exchequer, John Aislabie, was removed from power and imprisoned in the Tower of London. However, the King's grace was saved, and the national debt was consolidated. Even 300 years later, Britons are still paying off the debt from early 18th century Great Britain. Yet the South Sea affair has left its stamp on today's world. Guy's Hospital, now affiliated with King's College London, is a tangible memorial. Its founder Thomas Guy made his fortune by selling his shares at high prices. For every winner in speculative manias, there are many more losers. Sir Newton was also among the many losers during the South Sea bubble. As he famously said, "I can calculate the motion of heavenly bodies, but not the madness of people."